Hey everyone. I've had a lot of real estate agents and investors reach out to me to see what I think about this coronavirus issue and how it's going to affect real estate in Houston and just real estate, the industry in general, and the economy. I actually sent out a newsletter to all my private lenders, giving them my thoughts, and I wanted to share them here as well. I've got some notes so I don't ramble, but first off, the stock market. I'm not a stock guy. I've got EXP stock because they give it to me for what I already do. But the one thing I do know about the stock market is it goes up, it goes down, and whenever we have issues like this, economic related or crazy pandemic related, it will rebound. When that's going to happen, how soon that's going to happen, I have no idea. Your guess is as good as mine. It will rebound, but there's probably going to be quite a bit of volatility, at least until we get past this hump or get towards the tail end of the coronavirus issue. For all I know, it could go down more. Not really sure, but ultimately it will rebound. Unemployment, no doubt, already risen, and it's going to stay well above the pre-COVID levels. I don't really think anyone would be able to argue against that. So the most recent numbers, I think it was like over 3 million currently unemployed. It's huge, absolutely huge. But there's gonna be a lot of jobs lost. Even once we get past this, there's gonna be businesses close, jobs, like companies they'll bring back a lot of their employees, the ones that they can, but they may be slow in doing so. And some they're probably going to cut permanently. Brick and mortar businesses, in my opinion, brick and mortar businesses are going to be the hardest hit, biggest casualties of this, or the biggest business casualties of this coronavirus thing. Unfortunately, it's the virtual competitors for brick and mortar, they're just better set to weather this kind of storm. They don't have all the overhead, and they can trim back as far as staffing. They can trim back in staff, but they don't have to worry about trimming back in office because a lot of them, especially the small businesses, they don't have an office. They run out of their house. It's just a sad thing, but this probably was the greatest gift ever to companies like Netflix, Amazon, and other tech companies, Zillow, that can weather this storm without the massive overhead. And those companies are they're definitely affected, but if you're a brick and mortar company, local retail, mom and pop, it's just very unfortunate. A lot of them are going to go out of business without some substantial support from the government. Retail sales for real estate. So retail sales, they're going to slow. Naturally, it's going to slow. Right now in Houston, if you look at the numbers, really doesn't seem like anything's happened. It kind of seems like it's like coronavirus wasn't even an issue. But I think over the next 30 to 60 days when we get some data, we're going to see a slowdown, especially with unemployment rising. People need money. They need money to buy houses. I heard today that some of the lending criteria has gone up, especially for FHA. That's going to cause some issues for some buyers. I think the lower price points in Houston, and really probably nationally, the lower price points, they're going to bounce back quicker. Especially in Houston, like the sub $200,000 price point probably won't see a change at all. But anything over the median, it's going to be a little bit slower, especially over the $300,000, $400,000 price point. I think they're going to take the biggest hit, and maybe slower to rebound. And it's just my opinion on how that's going to play out. And of course, a lot of this really depends on how long we're in lockdown. We're in lockdown for like another 2 weeks. Maybe we'll see a faster rebound. But if this thing lasts another 4, 6, 8 weeks, it's going to cause some problems. Secured notes. So secured notes. Investors scared of the stock market right now. Where are they going to put their money? Real estate is going to be a huge alternative and benefit for a lot of that money. And these are going to be folks that they're either buying rental properties, or they're loaning on rental properties, or they're buying notes. And this can be a great alternative to the stock market for some of these investors that are nervous about the volatility, which brings me to rental properties in general. If we do see a slowdown in retail sales, naturally, it's going to help rental properties. How that's going to affect rent rates with more supply, not really sure, because that also could potentially mean more demand because people aren't buying houses. I think some buyers may want to hold off during this time because they have to for job or credit reasons. And some may just delay waiting until this whole thing passes. Maybe they wait till next year. And then some sellers, same thing. Some sellers may not be able to sell right now because they don't have anywhere else to go. So rental properties, I think, are going to be a huge benefit through this crisis. I guess if there's any good thing, if you're in the landlording business, that actually should be a boost to your business. And this is an area that we are going to be focused on, buying more rental properties. We're heading in that direction anyway. So we're planning on anything we buy to be able to rent it out and for it to cash flow really well. And just in case it doesn't sell, but in our case, we actually want the rental properties. Office Space. Office Space is another great movie. But as far as owning office space, I would not want to be in that business right now. Companies right now that have had to learn overnight how to operate in a virtual environment, when this is all over, yes, they'll go back to their office. But they're probably going to be looking for ways to shrink, or in some cases, especially for small businesses, eliminate their office space. Learning how to operate in the virtual environment, getting all the systems and everything down, that's probably a task pushed way down the list if you already have an office space, you've been running that way for a long time. But now that they had to figure out how to do this virtually, and if they can do it well, why are they going to be eager to go back into their office space and keep paying or renew their lease for another 3 or 5 years? They're not going to. A lot of them aren't. They're either going to look for smaller spaces and move some of their employees or contractors offsite, let them work from home, or they're just going to eliminate it completely. It's going to really put and make office vacancy increase. And over the next 2-3 years, I'd imagine we're going to see office rental rates drop. So I would not want to be in that space right now. And then last but not least, shameless plug, FBREI. So this is our networking event we do every month, first Tuesday of the month. And we are still having it in April. We're obviously not going to be meeting in person. I did have the intentions at some point of streaming one of the events that we did. So we're going to take this opportunity, and we're actually going to be broadcasting live on Zoom. You do have to RSVP. I think there's a limited amount we can actually have on the Zoom broadcast. So make sure you RSVP and log in early if you actually want to attend. But we have a great speaker, because right now, everyone's at home. Online content consumption is just skyrocketing to the point to where like big data companies or data users like Netflix and Amazon and all them, they're having to actually throttle the traffic, or in Netflix's case, actually reduce the resolution. So online content consumption is going up. The ability to know how to market using video is going to be super important for your business. It's been a growing trend, and especially now, we're in a virtual environment. You kind of have to, but going forward, this is going to be a bigger and bigger trend, knowing how to market yourself through YouTube, through online video content. And we've got an expert on that topic. He was already scheduled, so this is perfect timing. We have Connor Steinbrook. He has the #1 channel in real estate in Texas, like 31,000 followers. Look him up. He's got a great channel, but he's going to be talking about how he built that 31,000 followers. And I think it was a little over 2 years to get that. That's huge. That's huge. Just think of where your business would be if you had that many followers right now in your social media platforms. How would that change your business? So be sure to RSVP for that event. And then we've been teasing a new exciting announcement for FBREI, and we're going to be announcing that on the Zoom call. So make sure you tune in, RSVP. We'll put the link in the notes. And again, these are all predictions. I'm not an economist. There's a lot of people smarter than me. This is where I'm getting some of this data from. But and I've also talked with a lot of investors. I've talked with investors who think this is going to blow over and we're going to bounce back in April. I've talked with investors who think like this is pretty much like 2008 all over again, if not worse. And I've talked to a lot of investors in between. Ultimately, my opinion is that we are where we are. We need to make smart decisions, prepare for the worst, but be prepared to take advantage of opportunity as it comes. So, and of course, just analyzing the situation on a day-by-day basis, because ultimately we have no idea how long this is going to last. So that's it. It's Friday, and we'll head home and get a pizza for the family and drink a beer. Y'all have a good weekend. Stay safe. Hope to see you on the Zoom call next Tuesday for FBREI. Thanks.